If you're ready to level up and move beyond the same old candlestick patterns everyone knows, you are in exactly the right place. We're about to dive into some of the most powerful signals in trading. Let's get into it.
So let me ask you a quick question. Have you ever seen a pattern, a setup that just looked perfect, you jump in, and boom, the market immediately rips against you? It is one of the most frustrating things in trading, and 9 times out of 10, the culprit is a false signal.
And here's the real problem, right? The basic candlestick patterns, well, everybody knows them. They're in every book, on every website. And because they're so common, they are just not that reliable anymore. They can easily trap you. If you really want an edge, we've got to look deeper.
So, let's break down this first major topic, the problem with false signals. You know, those basic patterns are a fantastic starting point, for sure, but they often fail because the whole world is watching them. To find a real advantage, we need to focus on patterns that signal a much bigger, more decisive shift in what the market is thinking.
Okay, so let's jump in with 2 really powerful patterns. These are fantastic for spotting short-term trend reversals, the island reversal and the hook reversal. Learning these can give you a serious heads up when a sharp move is about to happen.
First up, we've got the island reversal. Now, the key thing to look for here, the dead giveaway, is a gap on both sides of a candle or a small group of candles. It literally creates this island of price, totally stranded. That island candle, which is often a doji on high volume, is basically screaming indecision between the buyers and sellers. It's a huge tell that a short-term reversal is coming.
So, how do you actually trade this thing? Well, you've got to be patient. You wait for that second gap to form. That's your confirmation, that's your green light to enter. Now for the stop loss, you place it inside that second gap. Why? Because if the price comes back and fills that gap, the whole pattern is busted, and you need to get out. Simple as that.
All right, next up is the hook reversal. Now this one's a little more subtle, a bit quieter. After a nice trend, you're looking for a day where the candle has a higher low and a lower high than the day before it. It's basically an inside day that tells you the old trend is running out of steam. It kind of creates this hook shape as the price starts to turn back.
For trading the hook, the play is to enter on the second day of that new move. You want to see that the reversal actually has some legs. Your stop loss is pretty straightforward. You just tuck it right beyond the recent swing point. So that's below the low for a bullish hook or just above the high for a bearish one. After that, you just ride the wave as long as the momentum keeps up.
All right, let's move on to our next couple of patterns. And this is where things get really interesting. We're going to look at this Sanku pattern, which is all about spotting when a trend is about to collapse from exhaustion. And then we'll cover the kicker, which is hands down one of the most powerful reversal signals you'll ever see.
Okay, the Sanku, or 3 gaps pattern, is just fascinating. It's not actually the reversal itself. Think of it more like the flashing warning light before the reversal happens. When you see 3 gaps in a row, all in the same direction, it's like a sprinter just burning themselves out in the final stretch. It's a sign of extreme, unsustainable momentum. A reversal's probably right around the corner.
Now this is super important. Because the Sanku is a warning sign, you absolutely do not trade it right away. You have to wait. Wait for some other confirmation, like an RSI divergence or a MACD crossover, something that tells you the momentum is officially dying. If you do get in and the reversal fizzles out, you get out immediately. This pattern is all about patience.
And now, the kicker pattern. I mean, this is the definition of a shocking turn of events. The market is happily trending in one direction, and then, bam, a gap in the complete opposite direction, followed by a huge, powerful candle. That first monster candle going against the trend, that's your kicker, and it's a violent, undeniable signal that the whole game is changed. Because this signal is just so incredibly strong, you don't have to wait around. You can get in near the close of that big kicker candle. And the stop loss is easy. Just place it right below the low of that same candle. The beautiful thing about the kicker is that it's so powerful, it often kicks off a whole new trend, which means you could potentially stay in that trade for a while.
Okay, so we've seen what these patterns look like, right? But to really, truly master them, you need to understand why they work. And it all boils down to one thing: market psychology. It's about the pain of being caught on the wrong side of a trade.
This quote right here, this is the secret sauce.
This is exactly why these patterns are so powerful. They don't just signal a little shift in direction. No, they create an absolute stampede by trapping a whole bunch of traders who are betting on the old trend and are now suddenly, painfully wrong.
This whole idea is built on a concept called thrusting lines, and it's actually pretty simple. The further a candle moves against the trend, into the body of the last candle, the more people it puts into a losing position. It ratchets up the pressure. The advanced patterns we just talked about? They're just extreme, high-pressure versions of this very concept.
And what you get is this incredible domino effect. First, the sharp move traps all the traders who are on the old trend. Second, their stop losses start getting hit, one after another, which just adds more fuel to the new move. And then third, all the savvy traders see what's happening, they spot the reversal, and they jump on board, pushing the price even further. It's a full-blown chain reaction.
All right, let's bring it all home. In this final section, we have to talk about the rules. Because look, knowing the patterns is one thing. Understanding the psychology is another. But trading them successfully, that takes discipline. So let's lay out the framework you need.
You got to remember, using these patterns is like wielding a double-edged sword. On one side, the power is incredible. You get strong momentum, high reliability, and crystal clear entry signals. But on the other side of that sword is the risk. You are, by definition, trading against the established trend. That's always risky. There are no built-in price targets, and you have to be ready to move fast.
So, what are the final takeaways here? The rules of engagement. Number 1, and I can't say this enough, always use a stop loss. No excuses. Number 2, don't get greedy. These patterns give you a powerful thrust, not a guarantee. Ride the momentum, but be ready to take your profits when it starts to fade. And finally, never forget the bigger picture. A reversal on a daily chart could just be a small pullback on a powerful weekly trend.
So in the end, it all comes down to this. You can see the patterns now, you know what to look for, but the real question you have to ask yourself is this. Do you have the discipline to actually trade them, to follow the rules, to manage the risk, and to pull the trigger when the moment is right? Because that's what separates someone who just knows the patterns from a real trader.